Um, Good evening, everyone. Sorry about that. This is something I will let you guys know about in the few coming weeks. But in most of the videos, there will be an intro, right? But I'll have like some visuals to it, obviously, so you guys can see what's happening in the videos. But that's the energy I'm coming to you guys with, the warrior type of shit, bro. Like, okay, let's get on with this video. So I have my gold here. We took the first trade in the boot camp. So this is just a review. I'm going to be reviewing. I'm going to show you guys how I came up with the bias. Obviously, I sent an analysis in the group prior taking the trade. I think a day before I said I am leaning bullish on gold and I'll probably be buying on Friday. I sent that on Thursday. Excuse me. So why did I send that on Thursday and say I'm going to be buying on Friday and eventually get a buy trade, which was actually a profitable trade in the boot camp? So I'm just gonna highlight that. On a daily time frame, I was looking at how we completely fill this BC here, and we tap the bullish order block, the proportion block here on the daily, and looking at the body here, the bodies they respected the proportion block, so it was just a tap, and then we rallied, we inverted this premium fair value gap. So if you violate the premium arrays, it means we are bullish, and we respect the discount arrays, which is this fair value gap here. You look at that, and also this last down close candle, the CE of that, and then we pushed higher. So we've been pretty much bullish. And if you look at the premium array here, which is the last up close candle in this series of up close candles, prior I ran lower. Here on Thursday last week, we closed above the main threshold of that order block, which means that we are pretty much bullish because we are still violating premium arrays. And another thing, right? You look at how the Thursday closed above Wednesday's, uh, price. This is displacement, and I was hoping to get a buy entry below previous day's low when we hit this bullish order block here. I thought we were gonna see it run all the way down, so I'm still gonna wait for that trade next week. But looking at obviously I do have some annotations here. So this is the proportion block on daily. We hit that, inverted this fair value gap here, last down close candle, bullish order block. We hit that, but mainly the CE, which I did not highlight, I'm just eyeballing it. So we respected that, and then we displaced higher. We also closed above the main threshold of this daily candle, and then doing that we ended up forming relative equal highs, which was my draw pretty much on Friday. But I was hoping that we're going to open on Friday, get a sweep below previous day's low, fill this imbalance, stay at the upper quadrant of this imbalance, because that also signals that institutional order flow is actually pretty much bullish. All right, and also I was looking at this inversion fair value gap, how the candles here stayed above this inversion fair value gap right here on the daily. Yes, the weeks can do the damage. This is just a mohawk, but we respected this bullish order block right here because the body of this candle did not close below the main threshold. So this is pretty much bullish, and the body stayed above this inversion fair value gap, right? And then on Friday, I was just using the relative equal highs on daily as my draw on liquidity, because on Thursday we failed to reach for these highs, but we ended up generating more buy side liquidity, and we had this. So I had an alert. Now I'm going to go to the 4-hour chart, and I do have some annotations there on the 4-hour chart as well. So looking at the 4-hour chart, everything looked pretty much balanced. This is the high on a daily. This is the high which I'm now gonna have marked, which is this is the Thursday's high, right? And then looking at the 4-hour chart, obviously this is the inversion on a daily chart. You look at the imbalances here, everything is looking, is pretty much balanced. We found support here at the new week opening gap with that bullish order block, proportion block rather, and then we displaced all the way up. We had an imbalance right there on the move to the upside, which held price pretty much beautifully, gave support, pushed higher. So if you look here, there is no imbalance except for that area right there. But above there we have what? We have a bullish order block, and it's on this bullish breaker right here. So it's not a breaker, it's a mitigation block, right? So this could be what? A breakaway gap. And also looking at this move lower to where we think price is going, this could pretty much be a measuring gap because it's almost at the midpoint of this range, going from the low to the implied deal. This is actually my implied dealing range, because this is my drawn liquidity at relatively high. So we might see gold, we might not see gold trade back into this BC here. From here it could just go all the way up. So I'll pretty much comfortable looking at the 4-hour, buying uh, a retracement into this bullish mitigation block here, right here. Now we had other PDRAs, right? Intraday that I want to show you guys. Now I'm gonna zoom in on this 4-hour chart. So I was just looking for PDRAs I can use for me to actually get a buy entry here. So I found the CE of this candle right here. I'm just gonna do this, and the CE of this candle right here. I mean the week, sorry. The CE of this week on a 4-hour and the CE of this week here. If you take all of this, they give you something called an implied fair value gap. So I wanted to watch how price reacts after feeling this implied fair value gap here, given that I am presuming that could be a measuring gap. So I'm not expecting price to come all the way down. So I was just marking this implied fair value gap and also this bullish order block, looking for support in these areas at discount, because if you check on 15 minutes, we actually have a pretty much a dealing range. So I'm just gonna show you guys. This is the implied fair value gap, which you saw on the 4-hour chart. And then if you look at the swing high and this swing low here, this is a dealing range. Why? Because this has sell side liquidity here. I'm just gonna have, and this also has buy side liquidity from these buys to these highs right here, and also from this high here. So this is a dealing range high, this is a dealing range low. So if I measure, excuse me, from this low to that high, and I'm watching the retracement, it should be I notice that it's a discount of this dealing range here. That is also a confluence, to say I should be expecting buys in this area right here, because the price moved from discount to premium and from premium to discount. So what PDRAs do I have in this range? I have the implied fair value gap, and it's also at the equilibrium. And look at how this is a discount of the discount, and we just went a little bit below that because we needed to, price goes from premium to discount and from discount to premium, right? So this is, remember, the Wednesday's high right here, which made what relative equal highs with the excuse me, with the daily highs right there. So that's what I was expecting, gold to actually eventually go run, to purge during New York on Thursday. But now looking at this 15 minutes time frame, obviously you can see that there was a dip inside the implied fair value gap, which is a discount of the dealing range. And then after that, I saw displacement, confirming that okay, a buy program has been put in. And I'm just now gonna go to a smaller time frame and now study the pre-market range, the liquidity formed during the pre-market range, and I'm gonna show you guys what that looks like. And obviously on retracement, if you're a swing trader, if you execute on 15 minutes and you already see that there's a change in state of delivery here with displacement, on retracement, you could just engage this fair value gap. But I just want a detailed entry, you know. I don't execute on 15 minutes. I don't execute on 15 minutes. I execute on 3 minutes, 2 minutes, 1 minute. Or maybe sometimes you'd find me executing on the 5 minute, all right? So once I saw this candle displace closing above the consecutive down close candles, moving with displacement away from discount, that was it. And I actually felt like, okay, now it's ready. It's getting ready to actually go all the way up. So let's go to 5 minutes and look now what Saikito was actually looking at. All right. So I just want to do something here quickly. Okay, so sorry about that. Yeah, there we go. All right, just give me a second. I'll sort this thing out quickly. The visibility here should be from current and below, not on 5 minutes because it's not on 5 minutes. Okay, there we go. Right. So this is the implied dealing range, right? You remember, I mean, the implied fair value gap from the 4-hour chart. So I'm not going to remove the dealing range. Remember, we've displaced and there's a change in state of delivery here. All right. Now we're going to be trading the New York session. So the New York session begins at 7 o'clock. And we want to study the pre-market range. So the pre-market range, basically anything before 9:30 is pre-market. From 7 o'clock to 9:30, that's pre-market. So I want to study the pre-market liquidity because if I'm bullish, I want to see all the pre-market range liquidity swept. I want to see that swept, and I want to see displacement confirming now a buy program being put in inside the New York during New York session, and that's what I want to be trading with. So looking at the displacement and the discount of this new range created now, we have this discount imbalance here, which is a basic. I already don't think that it should, go below this low here, but I want to study now a new bullish market structure shift after a sweep of liquidity here of the new pre-market liquidity. So let's go to 3 minutes and study this 5 minute bits, this 5 minute bits, right? So here on 3 minutes, there's nothing much to see, but let's go to 1 minute so you can see all the pre-market range liquidity that I was pointing at and the other confluences. All right, so at the bottom here I have silver, which is, it has a direct correlation with gold. So if silver goes up, gold also is also going up. So if silver fails to make a lower low when gold is making a lower low, and I want to be bullish, or I'm anticipating a bullish, that's SMT tipping, the market's tipping its hand and it's telling me that it's ready now to go lower because there's a crack in correlation. It means one of them is actually gonna go is ready to go up, and there's the failure to do so on silver. It means they're actually bullish. So that's what actually confirmed. This was like a qualifier of a trade that I was already anticipating. You understand? So I don't use SMT on my trades, but seeing this SMT with silver, it just it made me gain more confidence in the trade. Okay, so the pre-market is anything from 7 o'clock. So 7 o'clock to 9:30, right? So this is pre-market range. Okay, so at 8:30, this is 8:30. When we open at 8:30, did we sweep buy side or sell side? Because if I'm bullish, I want to see at 8:30 when we open, because at 8:30 there is an algorithmic hunt that begins, and you need to study your highs and your lows of the pre-market range. So here we have the high and we have the low. So when we open at 8:30, we sweep the low inside what? The BC on 5 minute. okay, there is some sort of change in state of delivery when we close above this high, and I was watching this fair value gap. But I was also watching this fair value gap here because I said, okay, I'll be watching this fair value gap and that fair value gap, and I'll see it displays above these highs, and I'll be happy to buy above something on retracement, then target these highs or target the highs up there. So I was gonna be happy with that, but I needed more confirmation here, and it was not ready. So it break down and came back for these lows again, completely filled the fair value gap now, and then it started running. I was still not convinced because I had this fair value gap here. I wanted to see it displace above this fair value gap and turn this into a bullish inversion fair value gap, but it was not ready again. And I kept on checking because I keep checking from 7 o'clock to 7:30. Is it ready? Because it can run from 7:30. It can run from 7:30. Okay, it's not ready from 8 o'clock to between 8 o'clock and 8:30. Is it ready now? No, it's still not ready. Okay, from 9 o'clock to 9:30, that's another pre-market range that you can study. 9 o'clock to 9:30, it was then ready between that time. And if it fails at 9:30, then I'll wait for the silver bullet, which is at 10, between 10 and 11. I want to confirm, I want to get the confirmation. So when 9:30 did this, swept the lows, and then SMT was formed. The body stayed inside the BC here, no body closed below the BC. That's a sentiment. It's telling me that I'm actually bullish. And if you look here at 8:30, we now displaced above this inversion fair value gap. And with the SMT as a qualifier, I was then confident to say, okay, now let's take this trade here when it comes back to the opening price at 8:30. That's when I bought, and then we targeted the Asian highs, and we went out right there because that was a 3R trade for the bootcamp, which is what I'm gonna be mostly going for in this bootcamp. So that's like a trade review, a full trade review, and obviously the pre-market range highs were not yeah, because these are relative equal highs in here, relative equal highs. So I was just gunning and going for those, and it's good when you're bullish and the pre-market range highs are still intact like this. We haven't ran any buy side. There's no displacement to the downside that much, and this is still, excuse me, holding price. So I'm now gonna show you guys a detailed review and then execution that I took. All right. So the pre-market range times, you study these 7 o'clock to 7:30, 8 o'clock to 8:30, 9:30. That's what you study, exactly as I said there. So you start when the bias is already established, you study the pre-market range. Now you need to be in alignment with this. You need to see where it's jagged, and you need to see where it is not jagged. So it kept coming for sell side, sell side, sell side, and then eventually it broke structure, and that's where I went long, and we targeted the Asian highs. That's where I actually went out. So remember, now we have midnight open above us, so it means we are already at discount. That's another qualifier. We are looking for buys below midnight open, so we are at discount, right? We are also um at a discount of that dealing range that I actually highlighted on the 15 minutes. All right. And then you start marking the highs and the lows from 7 o'clock New York times. That is the first 30 minutes. What is the IPDA suggesting? Focus on these time frames. 15 minutes, which is where I got the dealing range from. 5 minutes where I got the BC from. And 1 minute where I was just looking for the bullish market structure shift after a sweep. And then you find the trade between 7 and 12:30. All right. Then between 10 and 11, there's your silver bullet hour or SD. And then the candle bodies are staying inside the BC. That is a sentiment. This sentiment is telling me that actually I'm actually bullish. And what time did we make the sweep? At 9:30, exactly at 9:30. That's when the sweep came in. So the sharks are gonna go to where the smooth waters from jagged to smooth. So this is like what you should always have. Who's making money is the question that you should ask yourself. So the market kept on making lower lows, so it means sellers are making what? Money. So that's the guys, but the smart money will be targeting their stop losses because they will be trailing above these relative equal highs here. So that's what I just shared here, and this is not random. This is not buying and selling pressure. This is pure understanding of price. So this is the what's happening in the bootcamp, and I'll be doing these reviews and I'll be sharing with the public, but some will be shared with the private community. My students obviously will have to, they already know about this and more. And this is just me, uh, you know, practicing what I preach live in the bootcamp. All right. So thank you for the feedback. Let me just try and show you guys the trade that we took in the bootcamp now. Let's go to the bootcamp. This is the review, same review that I was showing you guys. This is in the bootcamp, so this is the trade that we took. Alright, so I'm just trying to scroll up. There are a lot of messages going on. Okay, so silver on daily looking good. We use silver for confirmation. I want to be long on gold. Okay, this is still me analyzing and sharing what I'm looking at. Still muted for now. Okay, these are the guys that are in the boot camp, and they're asking me the lot size. I can't see what Aikido is doing. Someone tell me. Okay, and then can you repeat lot size? Okay. I was just talking here and not sharing my screen because I was at a coffee shop when I take this drink. Not shared right now, bro. So I was just telling them I'm not sharing my screen right here. This was before we took the trade. All right, and then lot size. What lot size? How many positions? How many positions? How many stop loss? TP. This is what after calling the trade. Okay, this is the trade. Now we were in the trade. Okay, we need more organization because I was actually using one screen in the coffee shop. I was not using two screens like how I am right now. So that's why the guys were complaining and saying, bro, and these were his positions here. Went in. I made an error. Placed a 0.01 instead of 0.1. Okay, sorry, bro. It'll be better next time, I promise. Okay, this is the position. It's running now. The entry was at the 8:30 opening price, but some people caught it up here, but it was now running. Does he have a stop loss on? Yes. All right. Okay, so we started the bootcamp with $150, and this was his profits, running profits, 29 years, 22 US dollars difference. The guy was making $1, bro, because he used the wrong lot size. This Okay, she's also in. I don't know what account size, the balance of the account size. I'll have to check because I have all of their investor passwords. Probably tomorrow is Sunday, so I'll do that. So say I used the wrong lot size. And then I'll just share your screenshots. And the guys were just so happy with the first trade in the bootcamp. And I'm just gonna fast forward this. Fast track, fast track, fast track. It was now sitting at $66. Fast track. Now we're about to close. We closed at 213. That's the balance after closing, right? Because I said no, let's go out now. At what? At Asian highs. This was my trade, right? And then people were just sharing their balances after. The guy made it $5. Um, $210. And this is the wins, win. W is in the chat. W is in the chat. W is in the chat. Please share the. So I'm just doing this video because they asked me to. I've already done the review, which is this is what I was actually saying in the live stream. I mean, if you ask them, they're gonna tell you this is what I was saying. I said, okay, we're still staying inside the PC, and it's not ready yet. It's not ready yet. And I said, no, let's buy now when I believed it was ready, and eventually it delivered. So stay tuned, guys, for more trades, and we're taking this to $1 million. This bootcamp is gonna go to $1 million US dollars by December. The first phase is to take it to 150,000. Then the second phase will be from maybe 100K to $1 million. All right, so I'll see you guys on the next one. Cheers.